Welcome back, traders and investors. We have Todd Wenning on the line. He is an analyst with Morningstar. Todd, thank you so much for joining us today. How are you doing this morning?
Great, and thank you for having me.
You're very welcome. We're honored to have you. So, we want to talk about Morningstar's CEO of the Year award. You guys have your three nominees right now. Why don't you start by telling us who those are?
Sure. So the three finalists for the Morningstar CEO of the Year award are John Martin of Gilead Sciences, Greg Hensley of O'Reilly, and Gail Kelly of Westpac Bank. It's an Australian bank.
And explain to us what it means when you're nominating these CEOs for this award.
Sure, it's a very good question. So a lot of people think it's just the things that these CEOs did in 2014. But we really look at more as an achievement award over a longer period of time. Our CEO of the Year process is rooted in our stewardship methodology, which focuses on the skill with which management allocates capital. So it's not so much what they did in the current year, but what they've done over the last few years to build value for shareholders over the long run. There's a great quote by Warren Buffett that we use to kind of underpin our approach to stewardship. And it's, if you have a castle in capitalism, people are going to try to capture it. You need two things, a moat around the castle, and you need a knight in the castle who is trying to widen the moat around the castle. So what we're trying to do is identify the few the few management teams that have that are very strong knights that are widening the moat for shareholders.
So then, can you go into a little detail about what it was about each of these CEOs with their moat and their castle that made them the top ones for 2014?
Sure. So for John Martin, for Gilead, for example, Gilead we have as a wide moat company. One of the things we really like that Martin has done over the last 10 years or so is make very strong acquisitions, including Triangle, Pharmaset, and CV Therapeutics. They have a very long runway for key patents. They have a strong independence of directors at the board level, and they have a strong share repurchase program. For Greg Hensley at O'Reilly, the acquisition of CSK nearly doubled the store count. They really improved their distribution infrastructure, strong margin improvement, and they have very strong tenured leadership, strong corporate culture. And then for Gail Kelly at Westpac Bank, we were really impressed by the way she managed the company during the turbulent financial times, crisis times in the years after that in Australia. Very tight cost controls, very high Tier 1 capital ratios, low bad debt expenses, and strong dividend growth. And they outperformed a lot of the banks in that area. So we were very impressed with all three candidates.
And were there any other notable ones that came close but didn't quite make it?
Sure, we had quite a few. We had about 12 submissions for consideration. All of those CEOs are voted upon by the directors, and based on their votes, we reduce it down to the three finalists, and then the directors vote again to determine the finalists. So we had a few other finalists, or not finalists, but candidates, including Tim Cook, Howard Schultz, and so on. So we had a very good list to choose from this year.
And can you speak to a little bit of just the importance of the CEO as, the face of the company? I know Gilead is one of yours, and their stock is up over the past year, at least 2%. So can you speak a little bit to that as well?
Sure. So the CEO is the person who should be generally the capital allocator of the business. So the buck stops with them. They should be making capital allocation decisions that enhance the company's competitive advantages over time. That's what we like to see here at Morningstar. We like to see companies with management teams that invest in, make acquisitions or reinvest in the business that in ways that enhance their economic moat and strengthen their competitive position. And over the long time, we think that'll enhance shareholder value.
Okay, and tell us a little bit when we'll know who wins the actual CEO of the Year award.
You should know within the next week.
Okay, and I was looking over some of the previous ones who have been notable CEOs who have gotten the award in the past. I'm pretty sure I saw Warren Buffett himself on the list.
Yes, correct. Warren Buffett was on the list. He is one of our, one of the people who inspires us here at Morningstar, certainly with our economic mode approach. The person who won last year, Hunter Harrison from Canadian Pacific, we thought he just did a fantastic job in turning around that business in a very short period of time. And I should add that the CEO of the Year award will be announced on January 21st.
Okay, Todd, could you tell us what you cover at Morningstar? What sector? What sectors?
Sure. In addition to leading the company's stewardship methodology, I cover the paper and packaging business.
Paper and packaging business. So,
Yep.
I mean, I guess that's not really one sexy sector, but could you just, perhaps give us either an index or some individual issues to take a look at and get your comments?
Sure, absolutely. I mean, it's you're right. It's not a very sexy industry, but the returns have been quite good over recent years due to consolidation and margin improvement, especially in the paper packaging industry. One company that I think is worth keeping an eye on for investors, especially dividend-minded investors, is a company out of the UK called Wrexham. They are exclusively a beverage can manufacturer, and it's a very consolidated industry in most markets. They have very strong position in the United States, in Europe, in Brazil, and they're looking to expand in some more frontier markets such as India and the Middle East. So we think this company is undervalued. We think it's worth 550p, so pence. It does have a U.S. ADR, which we think the fair value of it is $44 a share.
And what's the symbol on that?
The
ADR?
ADR is
Yes, sir.
REXMY.
Okay, I'll just pull the chart up of that. Okay, on a little bit of a decline here, but $44 certainly gives some nice upside potential. Paper stocks. Back in the day, I remember trading Georgia Pacific. I know that was no longer around, but is Weyerhaeuser something that you follow?
I do not. That's actually another analyst that covers Weyerhaeuser. I cover International Paper, Rock 10, Midwest Vaco, Packaging Corp, those types of names in the paper packaging industry.
Okay. IP. Someone tried to take them out a couple times, didn't they, or tried some kind of a merger?
Well, they've been on the acquisition front. They really redid their entire business line over the last 10 years. They sold all of their forest land and reinvested into other areas of the business, such as container board, and they really consolidated that industry with acquisition of Weyerhaeuser Packaging in 2008 and the acquisition of Temple Inland in 2012. So they've been a very strong performer over the recent years.
Okay, and looking at the chart here, it has had a nice run. Now you said also containers, right?
Right.
Okay, so do you cover? I think is it TCS, the container store?
No, I do not. No, it's primarily the actual boxes themselves that I cover. The plastic packaging manufacturers such as Bemis, Sealed Air. Those are the types of names that I primarily cover.
Sealed Air, that's SEE, right?
That's right, SEE.
Yeah, that's had a nice run. Is it getting a little frothy here, yeah? Or you expect the move to continue higher?
Well, we think the fair value for Sealed Air is $38 a share. We think the management team has done a remarkable job turning around the business after what was, we think, a very poor acquisition of Diversey by the previous management team, and that really changed around their business. But they have a new management team on board within the past 2 years. They have the company pointed in the right direction, and we're very pleased with the way they've supported the company's narrow economic moat.
So what do you tell your clients when your target's 38 and it's trading at 43.35?
Yeah, no, we think that this is a company to certainly keep an eye on and wait for an opportunity to invest at a more attractive price. If they're currently holding, we think it's a good idea to hold that stock. We still think it has value.
And so 38 was your target, so you probably wouldn't get a little stronger on it until it was below that level, right? Like 33
Sure.
or 34. Is that because I always wonder about the approaches that these firms take. Well, the price target's 38 or the fair value is 38, 43 and a half. Man, let's go out and short the thing. But I know that that's not something that that you sell side guides can do that much. But just
Right.
wanted to. And who else is in there? Sealed Air. I mentioned the container store. Any other stocks in that sector?
Well, there's one company, we think it's still fairly valued right now, is Ball Corporation, BLL. Fair value is $64 a share for us, and we think that's an extremely well-run company. We think it has a narrow economic moat. This is another metal container company, so they do beverage cans and food cans and aerosol cans. And they have a very strong position, very strong management, which is very focused on expanding the company's competitive advantages. So they have an EVA focus, so all of their decisions are based on whether or not the returns that they're going to generate will be above their cost of capital, which we think will help support the company's economic moat in the coming years.
And for the paper companies, do you follow the price of lumber very closely?
Not too closely, as my colleague covers more of the timber companies like PCL, Plum Creek Timber.
Okay. And just in general, any words of wisdom for investors in 2015? We've had a pretty volatile year so far. Any final words?
Sure, I think it's important to continue to focus on a bottom-up approach, to focus on the businesses and the values of the businesses themselves, and you can still find very strong franchises out there that are trading at a discount to their fair value. So even if the overall market seems overvalued, it's still an opportunity to invest in good businesses at good prices.
Okay, we've been on the line here with Todd Wenning. He's a Morningstar analyst, joining us here on Benzinga's Pre-Market Prep, brought to you by MarketFi. Thanks a lot, Todd, and we hope to have you on again soon.
Thanks very much, guys.